Today we chat flat tax rate. So there's not a lot of difference, okay, when we talk about state income tax. We're going to Cliff Notes version this. I don't want to write a paragraph here. It's a percent of your income paid to the state. just one of the few people that we are going to get money to here. One other thing I want to make note of here. You're going to watch for flat versus graduated versus none. We're going to take a deeper look into that on Friday so we can start to see what states do what, okay, how much do they do it, and how much of a difference is that going to make in how much money you're making. For some of you, as you go along in life, you really might want to pay attention to what state you're living in. There could be a significant amount of money that you can save depending on where you're at. So flat, again, is one rate for everybody. Graduated means the more money you make, the larger of a percentage gets taken or used, however you want to look at that, versus some states that have no state income tax at all. And yes, they still function. So we're going to take a look at some of the goods and bads of all of those. But today we're mainly going to focus on flat rate, which actually is what quite a few of the states in the country end up doing. So, same percent for everyone, basically, is what the flat tax rate is. So no matter if you make $10 or $1 million, you're paying the same percentage. Now, it means you will pay more if you make more, but you're also making more. So it kind of evens things out a little bit. But nobody gets out of it, which you could sometimes with the graduated. So currently, there are 8 states in the union that collect no state income tax. So I'm just going to put their abbreviations here. So we've got Alaska, Florida, Nevada, South Dakota. Just said I was going to do abbreviations. Well, it kind of is an abbreviation. Texas, Washington State, not D.C., Wyoming, and Tennessee. Those are the only 8 that collect none. The other 42 all take it somehow. And we'll get to see that in a little bit of a breakdown more as we go along too. So yesterday we started talking about W-4s and how, depending on how you answered the questions, you might get some money taken off of your taxes, okay? We talked about dependents, okay? Today we're going to change up the vocab just a little and call this personal exemptions, which does include some of your dependents. So this is the amount of money you deduct, which is a good thing. It means it's less money we have to spend for yourself and your dependents. Okay, so even if you don't have dependents, you don't have children, you don't have someone that you're supporting, you do get to deduct yourself as well because you're supporting yourself. So you should get to be able to deduct yourself as an exemption as well. But again, the more of these you have, the less tax you're going to end up paying. So typically, what ends up happening, and again, is it going to change some from state to state? Yes. Okay. When we talk about federal taxes, these exemption numbers that you see are going to be much larger. But again, state tax we don't take as much normally. So while you're jotting a couple of those things, finishing those up, I just want to take a moment to talk a little bit about these kind of formulas and exemptions that they've got written here. There is a difference between a taxable wage, sometimes that's called a net wage, which is your annual gross income. Okay, let's chat this word for a minute. Gross does not mean it's disgusting, okay? This is your before tax income. Literally, before you take any of the things out of your check, okay? Taxes, health insurance, FICA, Medicare, so all that stuff, okay? Your gross income minus your personal exemptions. However many there are, however much that is. That's how much you're going to get taxed on. Then, your tax withheld, if it's a flat rate, is all we're talking today, is just what your taxable wages are after you take off the exemptions, times your tax rate, whatever that happens to be. So for our example today, state-wise, we're going to say if you're single, you get a $2,000 exemption, so $2,000 of your dollars do not get taxed. If you're married, it's $4,000, and for each dependent additional to that, you're going to get another $900. We'll always have this here. It's also going to be on the pages that we're working on. So, for instance, let's move up a little more here. So, state income tax. Jenna's gross income, before we take anything out, is $42,500 a year. The state income rate of 3.05% of taxable wages. Now, before we get any further, we've seen this in every other unit. Turn this into a decimal. So, divide it by 100 if we're not sure. 0.0305. Do not round that to 3. The government would not like you if you did that. Okay, Jenna is single and has one dependent. Calculate the state income tax she owes for the year. Okay, so before everybody starts taking their piece of the pie here, Jenna's making $42,500. Now, for this slot, okay, there's a couple of things that go into this. Jenna is single, so she gets a $2,000 exemption for that, and she has one dependent, which is another $900. So, before we start taxing Jenna, we're going to subtract $2,900 from what she makes. So Jenna is only going to be taxed on $39,600 of what she made. Okay, so that gets us to the taxable wages part. This would come in handy whether we're doing state or whether we're doing federal. Yes, sir. Sure. So we just slide that number on down. Now my tax rate, we calculate it up here. So we're going to multiply by that 0.0305. So we got about $1,207.80. Oh, I was supposed to put the tax rate in there, wasn't I? Okay. Live and learn, Hardy. Tax rate there. Okay. We've still got the number here, so we're okay. So, I mean, she'd still have an awful lot of money left, even after taking that out. But let's take one more peek at Jenna's here with something else, so we can kind of start to get this in perspective. If Jenna gets paid bi-weekly, every 2 weeks, how much does she pay in state income taxes per pay period? So in other words, if I take that 1207.80, okay, that's for the whole year, and I want to see how often she's paying each pay period. If I take 52 weeks, because there's 52 weeks in a year, divide by 2, okay? So we're going to divide this by 26, because that's where the biweekly comes from. And we can get a little idea, oops, divided by 26 already. She's going to be paying, excuse me, $46.45 each paycheck. So whenever you're trying to figure out, hey, how much do I pay for this every year or that every year, you really could just take the little number in your check, multiply it by 26, and you can see how much you're paying for a whole year. Because you don't pay them all at once. They spread it out. That's a lot easier to be able to do. But that's all there really is to a flat tax, whether it's state or whether it's federal. So let's play one more time here. I wish I had more dependence on this second one, but it happens. So one more time, kind of using the one above us as our example. So Jeffrey's gross income is $89,275. Okay, let's see. Jeffrey is married, no dependents. So I look back up. Married is a $4,000 deduction. Double a single. No dependents, so no 900s to add on this time. So Jeffrey's taxable wages will be $85,275. But this state income, 5%. Man, I need to live in that last state. It's almost 2% less. So my tax rate here is 5%. So let's see. 4263.75. Again, that's yearly. This is why we don't wait until the end of the year to pay off our taxes, because our eyes would bug out at the amount of money we owed at that point. And we're going to do the same type of idea that we did before, except now, again, the question changed slightly. If Jeffrey gets paid monthly, so here's my yearly taxes. How many times is monthly in a year? 12. So I do have to pay attention to words like that. That's going to make a difference. So we're going to divide that by 12. Jeffrey'd be paying $355.31 per month. Okay. So a couple of things to mention here on the packet before we get into the pay stub and a couple of other things here. So as you flip over here, page 10 is basically the same thing you're running as page 9 was. The only thing you want to do is make sure when you get to the exemptions, because the tax rates are there, that you remind yourself there are the exemptions that I'm using when I'm doing this. Everything else is going to be the same as you go through there. Now, I do have one change up to throw your way, though. Because we were going to do 9 through 11, and 11 asks you to use the cards on page 12 to figure this out. But then we're going to have all these people with different answers, and am I right, and how am I going to do this, and what's going on. So when you get to page 11, And I'm going to flash over there myself for a second. When you get to page 11, you need to pop over to Google Classroom for a minute, and I'm actually going to do that myself here, just a moment. If you are on the stream, you will see that I'm telling you the name of the person that you're doing, whether they are married or single, and how many dependents they have. You take that information, and I also need to tell you, which I just realized I didn't, and I'm going to put it on here, is what state they are in to tell you what the percentage of tax is going to be. That's kind of important. So let's update this on the fly. Hey, you get to find this out as I do here. Hang on a second. Victor, where do you live, Victor? Victor lives in Illinois. Poor chap. Because in Illinois, it is a 4.95% tax rate. Like I said, I will freeze this up here in a minute. Carrie lives in Michigan. No, not Missouri. Michigan. That's a little better. 4.25%. What about Emily? None of these people live in the good states where there's no taxes. What's wrong with them? Emily lives in Pennsylvania where the state tax rate is 3.07%. Okay. Let me get that updated in here. Maybe. It does not want to let me do anything. It just wants to go in spinners. Oh, because the internet's dead. Okay. That's good timing. Well, then I'll just leave this here. Forget them. I will leave this frozen that way once we get here. I will put this back up in a moment. But I do want to show you one other thing, and I'm going to freeze this for a moment.